My name's Matt. I go by the name of Merlehan.eth online, and I am an accountant at UEM Group. We're a small tax and accounting practice down in the Redlands, just south of Brisbane. And I have the enviable task of talking about everyone's favourite topic in this conference, income tax. It's definitely mine. Tax can be confusing at the best of times. Add to that the fact that we have very little assistance from the ATO as far as how to treat half of these things. So yeah, it can be very confusing. But just make sure you are reporting income on your crypto activities. I really don't want you to be that person getting laughed at by the ATO, just like old mate on the screen here. Because at the end of the day, anything crypto, the vast majority of it is going to be reportable on your annual income tax returns. So make sure you keep that in mind, make sure you keep proper records. We'll get into that a bit further. Now, there's a lot that you can talk about in crypto as far as tax goes. I have a lot of very complicated rules and regulations to consider when I do this on a daily basis, but I'll keep it simple for everyone here. The basics of crypto, basically your buys and your sells. Now at its core, crypto is considered a CGT asset by the ATO. That's a view they've held since 2014 when they spoke about Bitcoin back in 2014 in their tax determination. It's reportable based on your activity, buys and sells, liquidity provision, lending, things like that. But the treatment will come down to what you actually do. Are you an investor? Are you a trader? Are you a small business, like a mining or a staking operation? Are you a business that just accepts payment in crypto? Or are you an NFT artist? People that create NFTs and sell them on online marketplaces. Each of those particular categories of taxpayer will have different tax consequences when it comes to reporting their crypto. So most of you will know that buying crypto with fiat, not taxable, that's fine as an investor. But swapping back to fiat or swapping your crypto for another crypto, it will be considered a CGT event. So make sure you're tallying up all of your buys and sells during the year. Every time that happens, you are figuring out whether you've made a capital gain, you've made more money than what you put in, or a loss. So you took a loss on a sale, you received less than what you originally bought for it. That's pretty straightforward. And I would imagine most of us, if we've bought crypto, we're fairly passive in terms of our buying and selling. There might be some people that maybe spend a bit more time. They'll review technical analysis charts and they'll have an investment strategy. They'll have a certain size, even if it's actually size. It may not necessarily mean you're a trader, but that is one of the deciding factors. The frequency of your trades, you might do millions of them a day, or you might just do a couple a day. As long as you know those are some of the many things that go into figuring out whether you're an investor or a trader. Now the ATO has a guide as to what they consider an investor or a trader. You can be both. You can change between investing and trading. So it is important that you keep that in mind when it comes to reporting your crypto taxes. Know the difference between these two and know how exactly to report it. So if you are considered a trader, you're no longer reporting it as though it's a capital gain or a capital loss. You're reporting everything through a business schedule, even if it's not always a small business. Or you don't have access to those small business concessions. It still goes into a business schedule. You have trading stock rules, so each time you buy an asset with the purpose of reselling it, it's considered trading stock. You're going to have trading stock rules to consider, which includes valuing your assets at the end of each financial year and at the start of each financial year. And that goes into your business schedule as an adjustment to your cost of sales effectively. Now, same thing again, net trading profit, that just gets added to your taxable income and taxed at your marginal tax rate. But if you have a net trading loss, that's when it gets interesting. You can reduce your taxable income, can be quite tax effective. Now, I will just stress though, if you don't do a whole lot of it and you still think you're a trader, just make sure it's at least $20,000 worth of sales turnover, then it's okay. Otherwise, you may need to consider your non-commercial loss rules. You may not be able to claim it in your tax return as a deduction. You may have to carry it forward from year to year until you make a profit. Now for businesses, same thing again, you've got a business schedule. You do have some concessions and a lot of very nice tax breaks if you are considered a small business, as I have up on stage there. Now, something I don't see too many people talking about, especially in the NFT space, is that if you create your own NFTs, if you create anything, even musicians that are creating music NFTs now, they are considered special professionals, similar to sports people, similar to musicians. A lot of primary producers as well have these special rules to average their income out between years. Sometimes you have a huge income in one year and then it's absolutely nothing the next. Having the ability to spread that income tax obligation across multiple years can be very, very effective for some people. So that's worth considering as well. So those are the basics. I have a lot of fun stuff up there as well. These are the things that I like spending a lot of my time on. Now, especially in the DeFi space, it can be a 20-minute adventure at the time, but when it comes to tax time, trying to figure out how to calculate what to report in your tax return can end up a bit of a nightmare. And to make it worse is the fact that the ATO doesn't have too much guidance on a lot of these things, or it just doesn't make sense from first principles. Bridging from one blockchain to another, they consider that a sale. I don't agree with that. So a lot of us tax professionals in this space are kind of just flying by the seat of our pants, using our professional judgment to figure out what exactly we need to be doing. Until the tax office, until the government gives us some hard legislative binding guidance to go with, we're kind of left to our own devices. Now I want to wrap up quickly by offering you all some tax alpha. The first of which, timing is everything when it comes to crypto and investing and timing the market generally. You could defer income. You can basically pick when you earn your income. You can choose when to claim an airdrop, when to withdraw your money from a lending pool, and that can mean the difference between you going into a higher tax bracket in one tax year, maybe even bringing forward expenses to reduce your taxable income. It can mean the difference between paying tax on the full amount of your profit or 50% of your profit for individuals. Sometimes knowing when your income is earned or determining when your income is earned is more important than how much you actually earned. So timing is everything. Now for anyone that's new here, there are a couple of things I would suggest that you do too. Find a tax buddy, make sure you do your research, get it from reputable sources. The ATO is probably your first bet. Maybe some crypto tax calculation software solutions that provide numerous blogs on social media. They're probably the ones you want to be leaning towards more. I wouldn't necessarily be trusting old mate at the pub. an anonymous poster on Reddit, maybe a degenerate Spartan on crypto Twitter. Just kidding, I trust you, degen Spartan. And making sure that you keep records tidy from the get-go. It is important to keep them tidy. Using a software solution to keep track of those if you're a high frequency trader or investor, that can mean the difference between tax heaven and a tax nightmare. And just finally, for anyone who's been here before, make sure you plan for the future. If in doubt, ask questions. I am frequently fielding questions from people on Discord. I don't necessarily charge for that. Sometimes we normally would, but I like people to come to me with these questions before they do something. It can mean the difference between saving a heap of tax or paying a heap of tax. We had one guy, for example, that sold all of his Bitcoin, bought a house, didn't keep anything aside for tax. If he had come to us before he did that, he would know exactly what he needed to do, how much to set aside for tax, how much he could use of that to buy a house. Now he's kind of in hell. He may have to sell that $1 million house and tell his wife what he did and how he stuffed up. So make sure you talk to people. Consider some tax efficient restructuring. While it's a bear market at the moment, you may have some losses. It may be as easy as transferring it over to another investment vehicle if you're planning to be here for the long term. I am a big proponent of these within reason. Costs need to not be more than the benefits, but again, talking to someone like me will mean that we can have a sober conversation about these things. You might be able to save a bit more tax in that regard. And also consider your tax loss harvesting. It's a common term used to take losses to reduce your taxable income. You need to be on top of your records to be able to plan for these things, and that is going to make your life a lot easier when it comes to tax time. I'll be around all day today, so I'm more than happy to field some questions from anyone in the audience. Otherwise, I've got my details up there. Hit me up on Discord or Twitter. That's where I'm the most active, or drop an email to me. And yeah, thanks to the guys for having us here today.